So I am a technology analyst for an investment bank in New York called Freedom Capital Markets. So I've been covering the tech sector ever since the mid-1980s. And so I've seen a lot of mega trends. And of course, today we're talking about AI, the latest and greatest. And I will tell you that when it comes to these cycles, there's obviously also a hype cycle. And what happens typically is they overestimate the near-term impact of a technology transition. But believe it or not, despite the near-term hype, sometimes they underestimate the long-term. And I think that's what's going to happen. I will tell you that I also ran a very big tech fund for Merrill Lynch during the internet bubble. So I'm often asked, what is different when that bubble popped? Because when that bubble popped, the NASDAQ went down about 80%, and it did not recover for 14 years. And this. So I would tell you, are we in an AI bubble? I would say absolutely. However, I think that it's not going to pop for several years. Because here's why. This year, the hyperscalers, which are your huge technology companies, Amazon, Apple, Meta, the likes of those companies, they're going to spend about $400 billion on AI this year. And I've just listened to all their quarterly conference calls, and they plan to accelerate the spending, which they've already accelerated several times into 2026. And so you worry that with all this spending, when we're done, we're going to probably spend several $1 trillion with a T. You will have companies that will be disintermediated by AI. You'll have some companies that promise to monetize AI, but they never will, so there's a chance that their stocks go to zero. But the thing that's different this time versus the internet bubble, and when that popped, is the people that are spending the money, or the bulk of the money, have the money. These are companies with very big balance sheets. They generate tons of free cash flow. Until this point, they have been spending their free cash flow to invest in AI. And even when that runs out, they won't have to go too heavily in debt. And the other thing that's happening is during the internet bubble, when they built this infrastructure, quite often it was money lent to other people in the ecosystem. Now they're taking equity stakes in each other. Now that could lead to a different problem, but at least we're not going to have in the next couple of years someone, particularly OpenAI, not being able to pay interest expense. Last time, during the internet bubble, we had a lot of debt, and when you can't pay your interest expense, you're finished. And also, some of the companies that were borrowing it were, in the United States, it starts with an S and it ends with a T, those kind of companies. This time, the hyperscalers are spending. They have big pockets. They're generating free cash flow. And if they want to borrow money, which they may or may not, they will be able to do so easily. But I will tell you that one of the things that does worry me, in the United States, we call it circular investing, right? Here's the deal. You have a company, OpenAI, right, which started the revolution in November of 22 with the introduction of ChatGPT. And right now in the private markets, it's being valued at $500 billion. So if you put it today in the S&P 500, our stock index, it would be company number 16, that big. They're going to do an IPO. They haven't announced it, but I see it, sometime in 26, and they want to do an IPO that raises $60 billion, and it's going to value the company at $1 trillion. My God. And if this IPO comes to fruition, and of course all the investment banks will love to have that deal, $1 trillion valuation, that's big. And also the $60 billion, I think that would be the most money raised ever in IPO. I think the record was about $30 billion with Saudi Aramco back in 2013 or 2014 or such. And so this will be very interesting because I don't know if I necessarily believe in the theme of circular investing, particularly since we're taking equity stakes and we're not borrowing money, but everybody depends on OpenAI. Everybody. And so you better hope that that company is what we call in the States a grand slam home run. Because you think about it, Microsoft owns 27%. NVIDIA has just invested $100 billion. AMD, if they get to certain milestones, will take a 10% position in OpenAI. And all the spending by the hyperscalers is typically backed by OpenAI, either directly or indirectly. And so I'm not so worried about circular investing blowing up as it did in the late 90s, early 2000s. But this concentration on OpenAI, let's say it's a bit scary. And the last thing I'll say before I close my remarks is you might have seen Secretary Pompeo here last night. I might have a different opinion of said president, but this negotiation ongoing with the U.S. and the Chinese, I am more worried than most. I don't necessarily worry about the tariffs. Those are bad enough, but I think it's a negotiating ploy. But what happens if the Chinese say no to NVIDIA chips being exported from the U.S. to China? That is a big deal. We need NVIDIA to be able to send those chips to China. And it's not just for the sake of NVIDIA, it's the sake of the ecosystem. And so I read the tariff stuff, kind of half-heartedly, but we must do a deal with the Chinese, and we got to get those NVIDIA chips there. So I will tell you, that's my perspective. And if you want to catch me in the break, all I do is cover tech stocks for a living, so I always have ideas. But hey, thanks guys for having me.
Well done.